Alibaba just reported earnings about a half an hour ago, and I've gone through the results, and here's my first look of those results. And so guys, as you smash that like button, let me run that intro. What's up guys, and welcome back to the channel. Now overall it looks like nothing really has changed with Alibaba. That's sort of my first impression with the results, but I'll let you guys decide on your own. So here's what's going on. So first things first, I wanted to see what the market reaction would be to the earnings, and this is pretty much what I would expect the market to do. Nothing too crazy, no moves on either side. And largely it's just because we haven't really received any new news, especially for the items that we were looking to see a little bit more of improvement on, which of course is their Taobao and Tmall segment. I was hoping for a little bit more information or a little bit more progress with the cloud segment as well, and we still haven't received that, and I'll dive into that with a little bit more detail. So overall you can see that Taobao and the Tmall group are only up 2% year over year on the quarter. So this continues the slow growth for these quarters. And you know what? It reflects the fact that bringing the model down to show slower growth for this segment was the right move. I'm thinking I bring the model down even further. I think I have it sitting at around 4%. I think I might just bring it down to 2%. Cloud, once again, not seeing much growth here. I'm going to review how I'm looking at that in the model. Now, so that is the continued disappointment part of the business. There's nothing new here. This is what we saw last quarter as well. What we are seeing is some massive outperformance in the Alibaba International and Digital Commerce Group. And really what's happening here is that now that Alibaba has launched their equivalent to Amazon Prime, which is, I believe it's called Alibaba Choice or AliExpress Choice, you're seeing more and more uptake of that. And so it's really interesting to see how the growth is really surging in that area. So at least we have one area of bright spot for the company overall. But, you know, the company is challenged. They really need to turn things back around with their main segment. Now, just looking at profitability, you can see that Taobao Tmall Group, this is once again where virtually all of the free cash flow comes from for the company. You can see that adjusted EBITDA is 59.93. I understand that this is not exactly a free cash flow, but it's a good proxy, adjusted EBITDA is. And so just FYI guys. So on a consolidated basis, you can see that the adjusted EBITDA is 53 here. And of course, 59 or 60 of it comes from the Taobao Tmall Group. The rest of the business is a loss leader, except for cloud, which was interesting. It was interesting to see that it was so positive in the quarter. But the one thing that's a little bit challenging to me, and something I wanted to dig a little bit more into, is the fact that look how profitability declined in the international segment. My assumption when I first look at this is that it's probably not Lazada. It's probably the fact that they launched their Prime-like service and they're taking losses on that as they grow it out. And I think that's exactly what the story is going to be as we dive into that. So starting with the Taobao and Tmall segments, you can see that they're in the process of revitalizing the Taobao and Tmall segment. But really what they're doing is they're acknowledging that sales are declining. This is what we're really concerned about, and this is what's bringing the valuation down. There's no way of getting around this. They need to turn this thing around. And, you know, this is really a proxy on the economy in China, and things are not looking fantastic right now. They're absolutely not. And so what they did is in December, they appointed a new management team to execute Taobao and Tmall's strategy and drive business growth through technological innovation. Okay, fine. So the proof will be in the pudding. We'll see what they're able to deliver here. But as of right now, I think none of us are faulted if we bring down our revenue growth expectations for this particular segment. Now, I don't think anybody expected anything fantastic out of the cloud business. And, you know, that's exactly what we got. Subpar results as usual. The 9-month and the 3-month our revenue is pretty much the same at just a growth of 3%. And here's what Alibaba said. They said revenue excluding Alibaba's consolidated businesses decreased year over year, primarily due to the decrease in revenue from low margin project-based contracts as a result of continued effort to improve revenue quality. However, revenue from our public cloud products and services experienced healthy year over year growth. Okay, so more of this. and hopefully we start experiencing higher growth. And like the challenge that I have with the cloud segment is that in the 2021 Investor Day presentation, they explained to us why the Chinese cloud business would grow faster than the US. And this is what I'm talking about. And really what they did was they said, okay, up until 2020, the cloud market grew 42% year over year, or sorry, as a 42% CAGR. And so over the next 5 years, they would expect that to come down to a 37% CAGR, but still much faster than what the more developed US cloud market would look like. But instead, we've seen much slower growth. So this is where a lot of people are sort of shaking their heads. You really got this wrong, and they really need to turn this around. And they mentioned that they're focusing on the cloud segment as well. And so, we'll see how this plays out. But I don't think anybody is giving any credit to the cloud business. I don't think I'm giving much credit as well. But when it comes to forecasting the growth of the cloud segment, I think I'm going to bring this down to around 2.5% going forward until we see some turnaround here. Now, for the international segment, you can see once again that revenue grew substantially. But my question was, why did EBITDA decline so much? If I only could spell the word decline properly. And really what they said is that the losses increased year over year primarily because of increased investment in businesses including AliExpress Choice and Trendyol's international businesses, partly offset by improved monetization. So really what they're saying is this AliExpress Choice is what's the loss leader here, primarily, I believe. And they speak about it here a little bit more. They said the strong performance was driven by solid growth across all of Alibaba's international digital commerce retail platforms, especially from cross-border AliExpress Choice business. And here's what they're saying. They're saying Choice represented about half of AliExpress's total orders in January and continues to deliver rapid order growth. So they're just taking more losses here, and that it's not part of Lazada, and that was really what I was worried about when I first saw this, because I don't want Lazada to turn around, because Lazada was losing money at a faster clip before, but they recently improved monetization on it. And so they say it here, Lazada continues to focus on optimizing its operating efficiency, and Lazada's loss per order continued to narrow year over year during the quarter. So this is a really good news story. It would have been a much worse news story if Lazada started going backwards, and that's not what we're seeing. And remember, guys, Lazada in the Southeast Asia market is a market that's very challenging. You have really, really tough competitors, including Shopee. And so the fact that Lazada is starting to become more and more profitable or losing less and less money is very good. Overall, the international segment continues to outperform and impress. And so I'm hoping for continued progress here. And of course, I hope that the loss per order in the AliExpress Choice segment narrows, but I think that'll take a couple of years. Now, you guys may have seen this, but the company has, of course, increased their share repurchase authorization to $25 billion. That runs to the end of March of 2027. And of course, they'll just continue to increase it as they buy back more and more shares. Recall, guys, that over the last 12 months, they've repurchased $9.5 billion of shares. But I think that they can do a lot more. They have a lot of cash sitting on the balance sheet, and this is what I'm talking about. Alibaba's disclosed net cash position in US dollars is $70 billion US dollars. So, if you're purchasing $9.5 billion of shares per year, you can increase that significantly with the amount of excess net cash that they have. And so I'm hoping for additional repurchases. I see the $25 billion authorization. I think it would be nice if they returned some of that in this environment where the share price remains undervalued. Recall, guys, that it was Tencent that came out and said, in this environment, their shares are really undervalued, and so they're going to step up their share repurchases. I'm hoping that Alibaba sort of follows suit, but I haven't seen that yet. We'll see what they say on the conference call and see if there's any sort of motivation to follow suit with Tencent's lead on that. And just quickly going into the cash flow, you can see that the company did generate $20 billion at a 9-month ended clip. And of course, they paid out $7.7 billion US dollars. And so, as of the 9 months ended, the company is effectively buying back or using 40% of its free cash flow to repurchase shares. So I just think that, even if you were to leave the cash that's currently on the balance sheet, you can use a lot more of that free cash flow to repurchase securities in a lower priced share price environment. And finally, if you're watching this, you already know this, so I'm just kind of like preaching to the choir here, but based on where we expect their non-GAAP net income to come in by the end of the year, the company is trading anywhere between 8 and 10 times earnings, so very cheap relative to their valuation, I would say. But there's a lot of uncertainty here. Does the main business continue to decline? Does it go backwards? And how much of a risk is that? I don't think that the overall market is going to, or the overall buy side is going to come back into this until they see some progress here, because this could very well go backwards. My suspicion is that it probably won't. And the reason for which is because I think we're over the hump of the economic slowdown. I think we're now in an environment where we might be higher rates for longer than what we expect, but I do feel as though we're moving towards rate declines now. But we'll see how that plays out, because we are getting somewhat stronger economic data than we would have expected. But we'll see as the second half of this year comes through, and we'll see what the data looks like at that point. But lower rates in the North American environment, or sorry, like the Western world, could spur more demand, which could help the Chinese economy further. But of course, I don't think that's the intention. So it's really hard to predict what's going to come down the pipe. China also has its own issues, but I'm hoping that the Taobao and Tmall segments don't go backwards, but it is very likely that they could as well. I don't think it's going to happen, but I don't think it's going to happen materially. Like, I don't think you're going to see double-digit declines, but this could happen. And so you got to put that into your realm of possibilities, I think. And so as it comes out to modeling this out, you guys let me know what you're forecasting 4 or 5 years out for this segment. I think I'm going to settle in on maybe like 2.5%, maybe 3% until I can see any sort of like meaningful improvement. I think 2.5% and 3% is kind of reasonable. You guys let me know what you think. And of course, I'm going to be updating my Alibaba model, and I'll let you guys know when I do update it. I'll put out a new video. But if you guys want access to my Alibaba model and all the other research that I have, all the other companies, you can access all of that at that lower tier level at just $5 a month. And of course, if you find zero value in it, you can always just reach out to me and I'll refund your first month subscription, because I don't want to charge you anything if you get zero value from it. And so I'll leave it there for you guys, and I'll see you later.